In the fast-moving world of crypto, late 2025 has brought one of the most consequential gambits yet. Ripple, the payments firm behind the XRP Ledger, has quietly filed for an OCC-issued National Trust Bank charter. This federal license, which would create a wholly owned Ripple National Trust Bank in New York, could thrust its USD stablecoin, RLUSD, fully into the US banking system. Right away, a dramatic question arises. Does this move threaten to overshadow XRP, or could it actually strengthen the token at the heart of Ripple's network? RLUSD is a relative newcomer. Launched in late 2024, this dollar-pegged stablecoin is issued by Ripple through its NYC Trust subsidiary. By April 2025, RLUSD had already been integrated into Ripple payments for enterprise clients. Ripple reported it had reached nearly $250 million in market capitalization at that point. Since then, RLUSD's circulation has expanded significantly. On-chain tracking shows about $730 million. Outstanding by mid-September 2025, putting it among the larger dollar tokens in crypto. For comparison, Reuters notes RLUSD had about $470 million market value by mid-2025. In short, RLUSD went from almost nothing to hundreds of millions of dollars in under a year. These details aren't from rumor, they come straight from regulatory filings. The OCC application explicitly describes Ripple National Trust Bank as a de novo federal trust bank wholly owned by Ripple Labs, headquartered in New York, to support digital asset activities, including issuance and custody of RLUSD. In other words, the bank would manage the stablecoin's reserves and offer fiduciary services around it as permitted by U.S. banking law. Ripple currently issues RLUSD through its New York Trust Company. But a chartered bank would bring it under federal supervision. Why pursue this path? The answer lies in legitimacy and access. An OCC chartered bank could even obtain a Federal Reserve master account, giving Ripple direct access to the Fed's payment rails. Holding RLUSD reserves at the Fed, for example, would let Ripple settle transactions much faster and with less friction than via intermediary banks. Industry insiders note that such a dual arrangement, an OCC charter plus a Fed account, could grant Ripple unprecedented closeness to the traditional banking network, enabling near-instant institutional payments in stablecoin. Indeed, Reuters has observed that a charter would allow crypto firms to settle payments faster and cut costs by bypassing intermediary banks. This push comes amid shifting rules for stablecoins. The U.S. Congress has passed the Genius Act, landmark legislation specifying who can issue payment stablecoins and requiring reserves and redemptions, while banning interest to holders. Crucially, the act creates two clear paths. Federal qualified issuers like national banks, for example, a chartered trust bank, and state qualified issuers under caps. By aiming for a national trust charter, Ripple is positioning RLUSD on the federal path, likely seeking a much bigger scale and trust. Meanwhile, RLUSD still circulates on public blockchains. It already exists on the XRPL and Ethereum, and is used for cross-border business payments via Ripple services. If an OCC charter is granted, the issuance of RLUSD would simply shift under the new bank's umbrella, aligning it with federal banking frameworks while keeping the token live on-chain. This isn't just hypothetical. The OCC has already chartered crypto-native banks. Observers are closely watching Ripple's bid. In effect, RLUSD could gain top-tier credibility, a bank-issued stablecoin, without vanishing from the decentralized networks where it currently operates. XRP, by contrast, remains the ledger's native fuel. On the XRPL, every transaction burns a small fee in XRP, and every account must maintain a base reserve in XRP. The costs are tiny. The base fee is just 10 drops, 0.00001 XRP. So a million transactions consume only about 10 XRP. Even with RLUSD's recent growth, that burn rate is negligible today. But if RLUSD usage surges dramatically, even these small fees would add up. The XRPL's automated market making and routing are built around XRP. So more stablecoin volume typically means more trading and higher fees, even if each fee remains minute. Still, analysts debate whether RLUSD will complement or compete with XRP. On one side, enterprise flows might start and end in RLUSD, especially for S2 USD corridors, reducing the need to use XRP as a bridge asset. On the other side, larger RLUSD pools on XRPL give market makers more reason to hold and trade XRP for liquidity, collecting AMM fees. The XRPL's upcoming AMM's feature signaled since March 2024 is designed to route liquidity through the native token. Stablecoins like RLUSD will be among the first assets in those pools. In short, the network effect cuts both ways. The issue is global. Around the world, regulators are tightening stablecoin rules. Europe's MiCA law bans paying interest on stablecoins and imposes strict oversight on large issuers. Hong Kong's new regime, effective August 2025, requires fiat stablecoin issuers to be licensed, effectively rewarding tokens backed by bank-grade controls. The Bank of England is even considering limits on systemically important stablecoins. In that international landscape, an OCC charter could give RLUSD passport status, signaling to foreign banks and exchanges that its reserves, likely in cash or U.S. treasuries, are held under strict U.S. banking supervision. Finally, the legal overhang has eased. In August 2025, the SEC and Ripple agreed to end their lawsuit, leaving Ripple with a $125 million fine but clearing the way for XRP-related activities. With that chapter closed, U.S. banks have one less barrier to engaging with Ripple's offerings. The OCC application itself underscores careful structuring. It specifies that the trust bank will be a wholly-owned subsidiary with dedicated governance, a design likely intended to meet the new stablecoin law's issuer requirements. In short, Ripple seems intent on covering all compliance bases as it seeks to bring RLUSD into the regulated fold. With these factors combined, experts outline three paths forward. If Ripple secures both the OCC charter and a FedMaster account, RLUSD becomes a fully federal qualified stablecoin under U.S. law. Its reserves could sit at the Fed, and flows could move through Fed services, enabling banks and payment firms to onboard it easily. That scenario would likely attract heavy institutional deposits into RLUSD on both XRPL and Ethereum, dramatically expanding its market share. Analysts expect RLUSD to then capture significant new flows. XRP's network liquidity deepening as trading ramps up. The second path is getting the charter but not Fed access. RLUSD would still be federal qualified, but its reserves would sit at a commercial bank. It would gain a bank-grade compliance profile, aligning well with international rules like MiCA and Hong Kong's licensing. RLUSD could continue growing from its current float around $730 million. On XRPL, liquidity would still expand. Larger RLUSD pools mean more trading opportunities via XRP. In short, XRP would remain the necessary bridge asset for on-chain trades, even as RLUSD finds its footing. The third path is the status quo. No OCC charter. RLUSD remains a state-qualified stablecoin under New York's rules. It would continue relying on partner banks or exchanges for distribution, and its growth would be slower and more fragmented. Its scale might plateau without the boost of federal recognition. Under this scenario, XRP's role on XRPL would stay largely unchanged after all. There's no new regulatory framework to accelerate RLUSD. The numbers highlight the balance. At roughly $730 million, RLUSD is becoming significant, but is dwarfed by USDC's $62 plus billion and Tether's $150 plus billion. On the other hand, XRP's total supply is around 50 billion. Even burning 1,000 XRP a day would barely dent that supply. As CryptoSlate notes, even 100 million transactions would burn only about 1,000 XRP, negligible relative to 50 billion. In practice, even explosive RLUSD volume would mainly translate into more ledger activity and thus more small XRP burns and trading, rather than rapidly depleting XRP, stepping back. Ripple's strategy appears aimed at having it both ways. The goal seems to be making RLUSD the preferred stable settlement coin in regulated finance, essentially a bank-issued digital dollar, while keeping XRP as the decentralized ledger's liquidity conduit. The endgame may not be one token vanquishing the other, but each serving a distinct purpose under clearer rules. As one CryptoSlate analysis puts it, a charter would not erase XRP's role on XRPL. It would formalize the line between a bank-issued dollar token used for settlement and a native asset used for liquidity. None of this is guaranteed. Institutional preferences, market competition, and future regulations will ultimately decide the outcome. But on the evidence so far, granting Ripple a bank charter is more likely to define roles than to spark a showdown. XRP will survive as the XRPL's essential bridge, while RLUSD becomes a legitimized payment instrument for institutions, each token living up to its design in Ripple's ecosystem. Meanwhile, Ripple is actively expanding RLUSD's ecosystem beyond the ledger itself. In early 2025, executives like Brad Garlinghouse and MiCA long publicly said they're pushing for RLUSD listings on major exchanges such as Binance and Coinbase. Smaller platforms are already responding. On January 29, 2025, the crypto derivatives exchange Margex announced it had listed RLUSD for trading. Meanwhile, institutional exchange Bullish, backed by Peter Thiel, added 7 RLUSD trading pairs in late 2024, including XRP, RLUSD, and USDC. RLUSD, Bullish now handles about 70% of RLUSD's trading volume. In other words, even as RLUSD grows, XRP continues to play a major role on the trading side. Ripple is also weaving RLUSD into new financial products. In mid-2025, it announced a partnership with Ondo Finance to bring tokenized U.S. Treasury bills onto the XRP Ledger. Institutional investors will be able to mint and redeem these short-term Treasury tokens directly in RLUSD. In practice, this means a fund or bank can convert dollars to treasuries or vice versa via RLUSD on-chain. At the same time, RLUSD's backing remains strong. It is managed under a New York trust charter, and its reserves consist of U.S. cash and short-term government debt. Thus, RLUSD is essentially a blockchain version of a government-backed money market fund. All of this could be funneled into the new trust bank if a charter arrives, further solidifying confidence. Each of these developments reinforces RLUSD's credibility, but they also highlight how XRP and RLUSD interact. Any on-chain swap involving RLUSD still has to be cleared through the XRP ledger. and XRPL's pathfinding typically routes such trades through XRP. For example, trading data from Bullish shows that RLUSD is often converted to other currencies via XRP, in effect. Growth in RLUSD trading tends to translate into higher demand for XRP liquidity on the ledger. By contrast, purely USD to USD corporate transfers that happen off-chain in RLUSD could bypass XRP entirely. The reality is a bit of both. In practice, many trades will use XRP, while some specialized flows may not. Consider the scale of these tokens. By mid-2025, RLUSD's market cap had reached the high hundreds of millions of dollars. That's a huge jump from launch. But it still pales next to giants like USDC or USDT. XRP's own market cap is likewise on another level. Importantly, XRPL's fee mechanism means that even very large numbers of transactions burn only small amounts of XRP on the order of 1,000 XRP for 100 million transactions, which is trivial given XRP's total supply. Thus, RLUSD's rise has little direct effect on XRP scarcity. Its impact comes through transaction volumes and liquidity needs rather than token burn. Looking ahead, timing and context will be crucial. If Ripple obtains the OCC charter and, ideally, a Fed account, RLUSD could become the default settlement coin in regulated finance, effectively a digital dollar at a bank. In that case, many USD payments might shift to RLUSD rails instead of older networks. Even then, though, XRP would remain relevant for any multi-asset or cross-currency paths on XRPL. XRP would still serve as the on-chain bridge. Global remittances, FX swaps, or cross-border trades would continue to rely on XRP's low-cost rails when they involve non-USD or multiple steps. So in practice, XRP would still be needed whenever value is moved off the bank rails and onto the open ledger. In sum, the most likely outcome is one of coexistence and role specialization. A federal charter would position RLUSD as a bank-recognized dollar token, legitimizing a payment use case that many had envisioned for cryptocurrency. While XRP remains the XRPL's built-in liquidity asset, as CryptoSlate concludes, the charter would not erase XRP's role on XRPL. It would formalize the line between a bank-issued dollar token used for settlement and a native asset used for liquidity. Put simply, one token would become the regulated stablecoin of finance, and the other would remain the decentralized exchange token. None of this is guaranteed, but the trend so far suggests a complementary outcome. RLUSD's rapid adoption, fueled by exchange listings, regulatory structure, and institutional partnerships, has deepened use of the XRP ledger rather than cannibalizing it. If Ripple's charter bid succeeds, we could see RLUSD mature as a bank coin for regulated finance, while XRP continues as the XRPL's house coin. The story won't end with one token vanquishing the other. It will continue as each token finds its place under the new rules. Nonetheless, significant uncertainties remain. Nothing is certain yet. Ripple's gamble on us regulators could hit setbacks. A cautionary tale is the case of Custodia Bank, a Wyoming crypto bank that applied for a Fed master account. The Federal Reserve ultimately denied Custodia's request, and a federal judge even ruled that the Fed doesn't have to grant a master account to every eligible applicant. That history looms over Ripple. If the Fed were to reject Ripple's own master account application, RLUSD would stay at correspondent banks, still federally chartered if OCC approves, but without the direct Fed connection. That would temper some of the expected efficiency gains. Though an OCC charter alone would still mark a milestone, other regulatory factors could also curb the upside. Under the new stablecoin law, issuers may not pay interest on their coins. That means RLUSD holders won't earn any yield, potentially making it less appealing to users who chase returns. Many crypto investors are accustomed to staking or lending for interest. So a no-interest rule could reduce stickiness. For RLUSD, a trade-off for its safety. At the same time, these strict rules on reserves, audits, redemption, etc. make RLUSD very robust. Any shortfall in reserves or compliance failure would be quickly noticed under federal oversight. It's reducing risk, but also meaning Ripple will have to be extremely careful. By contrast, XRP has been operating in a more self-regulated environment now, with an SEC settlement behind it. So the two tokens face different compliance landscapes. Beyond regulations, market competition, and behavior matter. Even with an OCC charter, RLUSD still has to win market share. Stablecoin giants like USDC and Tether already dominate trading venues. Businesses and exchanges may stick with familiar options, unless RLUSD offers clear advantages. For example, international traders who value yield might prefer other instruments, since RLUSD can't pay interest. If another issuer finds a loophole or alternative design, they could race to launch a competing stablecoin under different rules. Ripple will need to demonstrate RLUSD's reliability and utility, not just its regulatory pedigree, to truly capture the market. From XRP's perspective, risks include price volatility and network adoption. Even if RLUSD thrives, XRP remains a volatile crypto asset. Its role as a bridge means it often gets traded or moved when markets are active. If XRP's price crashed or spiked dramatically, it could affect user behavior. Very low prices make fees negligible, which might stress validators while very high prices could make even small payments costly. However, XRPL's fee structure can adapt to extreme conditions. Most importantly, XRP's utility isn't tied to price. A drop or rise in value doesn't eliminate the network. It just changes economics. XRP's demand might even grow if more volume flows through the XRPL from RLUSD activities. Offsetting any volatility internationally, policymakers could throw surprises. A tight stablecoin rule in Europe or an outright ban somewhere could change plans. If foreign regulators impose new restrictions or deadlines on stablecoins, it could affect RLUSD's cross-border use. Conversely, seeing a stablecoin charter succeed in the US might push other nations to fast-track similar frameworks, indirectly benefiting RLUSD and its counterparts. XRP's international stance is unchanged by this story. It will continue to be traded globally wherever crypto is legal, in all scenarios. One principle stands out. A bank-issued stablecoin and a native crypto asset serve different needs. A wise way to see it is as specialization. RLUSD, issued through a bank, will specialize in regulated dollar transfers, much like a digital bank deposit. XRP will specialize in open market liquidity, enabling anyone anywhere to route payments through the XRPL. Both can grow simultaneously. In fact, stablecoin projects often grow the overall market, which can increase total liquidity on a ledger. Early data indicates that when stablecoins like USDC grew, on-chain activity also grew. So if RLUSD expands, we might see overall XRPL use increase. And XRP will naturally follow the flow of that use. Consider the final acting roles. If the OCC charter is granted, expect RLUSD to stride onto the scene as the bank-backed dollar instrument. It will be treated almost like an official currency by institutions. At the same time, XRP will remain as the internal token for XRPL's decentralization and pathfinding, quietly essential, but not directly replaced. If the charter is denied, RLUSD will remain a robust stablecoin, likely still expanding given its momentum, and XRP's status quo persists. Ripple's strategy appears to have hedged. RLUSD wins trust with banks, while XRP continues its role in the crypto economy. In summary, RLUSD's entry into the banking system would be a landmark for crypto, but it won't make XRP obsolete. Instead, it will codify what each token does best. RLUSD will become the dollar coin for regulated finance, and XRP will stay the digital asset for open ledgers. This dual arrangement plays to the strengths of both. As one CryptoSlate analyst emphasizes, the OCC move would not erase XRP's role on XRPL. It would formalize the line between a bank-issued stablecoin and a native network asset. Viewed objectively, the data suggest RLUSD boosts XRP's prospects. A bigger RLUSD market means more on-chain transactions, which means more XRP in motion. The burn of XRP might remain small, but usage will grow. In that way, RLUSD and XRP are set to reinforce each other. RLUSD can anchor Ripple's entry into banks, and XRP can absorb the increased liquidity demands on the ledger. It's not a story of one token conquering the other, but of two evolving in tandem, one upgrading the rails, the other fueling the engine. Ultimately, the final outcome will hinge on regulators. We're in the penultimate chapter now. The verdict is pending. Until we see whether the OCC charters Ripple's bank and whether a Fed account follows, both tokens will continue their slow dance. The most likely ending is a stablecoin that powers mainstream dollar payments, while a crypto coin powers the underlying network. That ending serves the audience, banks, businesses, and crypto users better than any knockout blow. In our view, if any single token benefits most, it's the XRPL network as a whole. RLUSD draws new players in, and XRP rewards them by providing liquidity and connectivity. For now, markets will keep moving on both tokens. Observers should watch exchange volumes, on-chain liquidity, and regulatory developments. Each new data point, a listing here, a legal tweak there, will show how the plot unfolds. But the available evidence points to a synergy rather than rivalry. An OCC charter would likely empower XRP by channeling new flows onto the XRPL, even while carving out RLUSD's new territory. And that is a narrative far from XRP defeated. Instead, it's a sign of crypto's maturation, a world where a stablecoin and a crypto can each play a stable role under clear rules. In the end, RLUSD will not replace XRP, it will stand beside it, each doing its part in Ripple's vision of the future.